Hey all, welcome to ShareTreck. This is Raj here. Good morning. This morning, Nasdaq futures are looking much better, and Dow and S&P futures, I would say they are mild to bearish or neutral. So it's very difficult to say where we are going. I think there's a little bit of disconnect between what we hear in the news and how the market is behaving. Usually they say if there is something in the news, it's already priced in. I'm not quite sure that is the case. I think the Mag 7 are leading the entire market, and now they are going a bit sideways. And today I am looking at the spread in the market, the number of companies that are supporting the index. So that it's also starting to raise a little bit. So I'm thinking Mag 7 is going to be consolidating and maybe fall after that, because there are so many things going on. I have some news articles that I want to show you and talk about them. Let me show you some of the news articles that have me concerned. The first one is Trump floats 25% tariffs on US auto drug chip imports. Now, this also is targeted at European Union. And then we have this news: COVID vaccine faces ban for all Americans in radical U-turn. So these are example of two of the news items that I have seen, and I think that this could have a bearing on how things may proceed with the yields and therefore what would happen to the stock market. Now, if we were to go back to CNBC, we have the news article here which says Trump Treasury yields rise as investors await FOMC meeting minutes and housing data. If you go into the economic calendar, I think today around I think 8:30 a.m. we have the building permits, housing starts, and then at 2 p.m. we have got FOMC minutes. So those things are going to give us a bit of an idea of how the Fed is thinking about, a little bit of view on the housing market. And at 10 a.m. on Friday, we have the existing home sales. So all of these put together will give us an idea about the health of the housing sector. And I generally look at the stock market from the Maslow's hierarchy, like basic needs are met first, and then you go to the next level of needs. And some people also say that you've got to look at consumer discretionary and consumer staples as an indicator of how good the times are. When the times get tough, people go to the consumer staples, because those are the things they need for sure. So food, clothing, and shelter are basic needs which will be stable at most of the times. And if there's a pressure on those staples, that means the economy is in a bad condition. And especially when it comes to developed economies like US and Canada, if the housing sector goes under a lot of stress, that means the basic needs of people is going to consume a lot of their income. And if people lose jobs, then it becomes even a much bigger proportion. And the owners of those properties have got less ability to borrow against it and support the market. And therefore, I think we should also keep an eye on the housing market, which is starting to look a little bit frayed. And apart from this, let us see, is there anything else? Okay, there's going to be a new modern day Berkshire. Bill Ackman raises bid for Howard Hughes, says he will turn it into modern day Berkshire. Yeah, that's a good objective to look at. And Tesla's law firm drafts Delaware bill that could salvage Musk's pay package. Now, these are the kind of things which are Banana Republic territory. If you don't like the law, change the law and get ahead with what you want to do. So these things are not that great in my opinion. And then judge orders Mayor Eric Adams, DOJ lawyers to appear in court to explain case dismissal request. This was again another Banana Republic move. Maybe the judge might say that you can't dismiss the case, you have to go ahead, which would be the right thing to do. But if the judge appears to dismiss this, saying both the parties are not interested, so it need not be there, then we are back into Banana Republic territory. So those are the things that are concerning me. I made a video yesterday about the high-cost sickle cell gene therapies. I made a video for CRISPR and Bluebird Bio together. You must have seen it yesterday. This is again a matter of concern. And COVID vaccine facing a ban. If this story is true, it's coming from Associated Press, so I think it has to be true. if this is true, then we are going into really crazy times. The world is changing, so maybe we are afraid that it's going in a different direction, but change is always difficult. This is what we are facing out here. So having said that, I think I'd like to go and have a look at our NASDAQ futures. And if you look at NASDAQ futures, you will see that we are up 0.08% in pre-market trade. We broke through the resistance we had at 22,079.75. And this morning, I think we are looking pretty good. And yesterday was a very slim red candle. There was a wide range of pricing, but the body of the candle was very narrow. Today's candle is a bit broad in pre-market, so hopefully we get a little bit more because MACD is bullish, momentum is also pretty high, and there's plenty of room on the RSI. So where is the money going to go? Probably not on the MAG 7, but other stocks which have been a bit of a laggard. If you look at S&P 500 futures, it's down 0.04. I don't think it's too much of a negative to begin with. The market can always turn positive because MACD is bullish. Momentum is above average, but a bit flat. And we have the resistance out here, which is at 6156.25, which also is the all-time high. And that is kind of pushing us back for the last 2 days. Are we going to break through it today? That's the question. And let's see what answers we get when the market opens. So we are at 6156.25 and the market is at 6145. So just around 10 points to break through. We'll see what happens there. Dollar index is gone up and it has gone above the resistance we had at 107.44. Dollar index mostly moves in tandem with the 10-year yields, and 10-year yields have also moved up. They have gone above the 21-day exponential moving average. So when these things happen, the money is easily made in a risk-free bond as compared to taking risk with stocks. So typically those risk-sensitive money moves into the bond market, and I think that's a possibility that could happen today. For bonds, I have got a yield of around 5.30 as the cup and handle targets. In the past, we have met our cup and handle targets, and this cup and handle target has been formed over a long period of time, July to mid-November. So I think it's going to take a little bit of time for it to be fulfilled. So I believe that the cup and handle target is still active. What this means is that the stock market is likely to go down as we get closer and closer to this cup and handle target of 5.3, and that's also going to mean job losses and other things because if rates go up too much, there will be a lot of downward pressure on the demand. So that's what I am worried about. But when will that happen? I don't know. It's very difficult to time the market. So now let's go on and have a look at the indicators. Dow Jones, the way it was yesterday was it ended at a gain of 0.02, which was a very minor gain, but the most important thing is it was still above the 21-day exponential moving average. And we have a bearish MACD and momentum is a bit flat. So our 21-day exponential moving average is what I'm going to look at as the support. If we fall below that support, then we have this diagonal line of support out here from the previous bull channel. I'll use that. I'm going to discard this line of resistance because it has been disrespected multiple times out here. So I think it's no longer in operation. So I'm going to take that out. We'll keep the chart simple. This is what we have here. Then S&P 500 was up 0.24% yesterday when it closed. And we have a support out here at 6092.01. I'm going to mark that green. It's a support, and MACD is bullish. Momentum is also above average, and we have plenty of room on the RSI to go up. And we also have reverse head and shoulder, reverse head and shoulder target of around 6199 or close to 6200. I think that is still in play. We have a little bit more to go. So I would say around 71 points on the index is still available for us to take. And then Russell index is down 0.38%. I think as the yields start going up, the regional banks are going to face a bit of pressure because bond market values are going to go down. The balance sheets start to look a bit weak. So that could also be in play out here, but Russell is definitely going down. And as I believe the tendency of the yield is to go up, I think the Russell index will start moving down. That's my feeling, and I would like you guys to let me know what you think about it. Then we have the Nasdaq, which ended up 0.23% yesterday's trade, and we still have a support out here at 22,107.02. I think we're going to keep on moving up from this point because MACD is bullish, momentum is also above average, and we have plenty of room on the RSI. But those improvements might probably come from companies other than the MAX 6. Then we look at put call ratio, which has become suddenly bullish. It's at 0.758, so this is giving us a good signal out here. And if we look at VIX, it is still below this resistance of 15.88. Pre-market, it's at 15.38. So volatility is in check from the VIX perspective. And I want to get a quick look at gold. Gold is still trying to break through the resistance that we had marked yesterday. We are still below that resistance, and if we break through above it, I think we have further movement to go. But then the bond yield increase is definitely going to impact gold, because gold doesn't give any yields. So if yields are there in bonds, people would prefer to park their money in the bonds. So that said, I want to go and have a look at the breadth. You can see that the number of companies whose price is above the 20-day and the 50-day exponential moving average has increased. So the market breadth is increasing. That's what is pushing up the indices. That's the way I would like to look at it. And I want to go into genomics. And I think there is a sectoral rotation taking place. And that's why we saw money come into genomics, and it can go out as easily as it came into the market. We have already met our target here for Verve of 8.54, and I think that we are now going to give up those gains. We have a golden cross out here. If we fall below the 21-day exponential, I'll do a rethink. But at this point of time, looking at the MACD, I think that we are starting to give up the gains. People are going to start booking profit. Pre-market, we are down 2.18%. And Ginkgo Bioworks is up 1.67% out here. We have not yet met our double bottom target of 16.35. So I'm hoping that we'll have a little bit more gains happening. But the state of the MACD and the momentum has got me concerned. And also another thing that I think will go against the Ginkgo Bioworks is that the first step is banning the COVID vaccine. The second step would be banning all this funding for testing. So the security business of Ginkgo Bioworks, at least in the US, might suffer a setback. And if other countries follow the same policy, then I think that's going to have an impact on Ginkgo Bioworks. So I think all this optimism out here might probably fizzle out. So please don't get angry at me because I am saying that genomics is not going to do that well. But the fact remains that if you're going to get high yields in the bonds, who's going to want to take risk in greenfield technologies? So this is the problem that I'm looking at, and I'd like to hear from you guys what you think, because most genomic investors have already been struggling for a long time, putting the money where their faith is, which is in cutting edge science and the promise of genomics. How much longer can the genomic investor hold on to this, and how much headwinds can you face? That's the question I'm trying to answer, and I'm coming at it from a neutral perspective. I'm a retired person. My risk capability is much lower. So I'm expecting that you would let me know what you think in the comment section. And then let's go on to Caribou Biosciences, which is up 1.41%, but this diagonal line of resistance is still on us. But I can see us picking up because MACD is bullish, but the momentum is still not above average. The pre-market indicates that today is going to be a good day. And Inf says, I agree, if sell-off genomics will be hit harder. It always is. Yeah, that's right. CRISPR Therapeutics is up another 0.27%, and it has met and exceeded our target of 51.72. So I'm happy about that. But going forward, I think we already hit our resistance on the RSI band, RSI scale. So I think we are going to consolidate and come down. We still have the 200-day exponential to support us, the 21-day exponential to support us. and this diagonal line of support from the previous bear channel to support us. Now what we need to see is whether we want to create higher lows and higher highs, which means we are creating a new bull channel. It could have a very soft incline so that it will take a longer period of time for us to go up. I'm saying that because we have headwinds from the bonds, we have headwinds from the policy decisions from the US government. So all of these have to be tackled. Next we have Grail. I took some profits on Grail yesterday, entered in the pre-market trade. I think I made around $400 to $500. I sold it and I don't have any Grail at this point of time in my hand. It was purely a day trade. Good money out there. Today again, pre-market, we are up 1.42%. I don't know whether it's going to sustain because earnings are just around the corner. We may also be in a situation where we have buy the rumor, sell the news situation. So I would be careful. I wouldn't do any trades in Grail today. Again, these are all my personal opinions and not financial advice. So please be careful. Think through your own moves. Don't go by what I'm saying. Do your own analysis. And Prime is up 0.33% in pre-market trades, but as I can see here, we are still inside the bear channel. But I'm optimistic that we are going to challenge this resistance of the bear channel because MACD is bullish, momentum is above average, and plenty of room on the RSI. And we have Beam, which is up 1.34%. Beam has shown a whole lot of gains so far. I don't know what is driving those gains, except the fact that we could have a sectoral rotation, and Beam is the beneficiary of that. We are still above our support of 33.38, which will act as a support for today, and our resistance is going to be 35.78. That's our next resistance. And I can also give you a minor resistance out here. If we look at this wick out here at the top of the wick, could be a minor resistance, which is at 34.10. So that's the range I can talk to you about. Alt Immune is down 0.31%. It is still below the 21 and 200-day exponential moving average. Momentum, MACD, all are looking weak. We need some positive catalysts out there. Bluebird Bio has no trades pre-market, and we can see that the momentum is quite low, and a resistance at 7.51 awaits us. MACD is bullish. That's the only positive out there. Allogen is down 1.06 after a couple of days of really huge gains, a gap up. And this again, I think is a rotation trade and the data release that they had. Now, friends, if you think about this, how often do we know when a data release is coming and that it will come exactly on the day that they have mentioned? The answer is not much. And then how often do we know that the data release is going to be positive? It could be either positive or it could be negative. In this case, it was positive. So it's very, very tricky. We're like gambling with genomics at this point of time, given the lack of transparency and the lack of information flow and the way the market is with bond yields trending higher and government policies going anti-science. So I would be very careful in the genomic sector in the next few weeks. Maybe covered calls or selling profitable positions is what I'm thinking. And I've done that with Grail. I did a day trade, but I just want to let you know, I'm still holding on to Alt Immune. mRNA is up 0.08%. I don't know why mRNA would be up. The earnings were not that great in terms of the reaction to the earnings. And also Moderna is downgraded by Barclays due to policy risk and weak revenue. And I can tell you, my friends, that if you look at what we saw, the news item out here, this should actually send a chill down everybody's spine. COVID vaccine faces ban for all Americans in radical U-turn, which means that even if any American was looking at this thing from a science angle and truly believes that he needs a vaccine, he or she can't get a vaccine. Can you imagine how radical that is? So I'm thinking that genomics sector, biotech sector in general has got a very high risk with this new dispensation. ARCG is up 0.41. We have a price target of around 32.80. MACD and momentum are all in favor of that. But this irregular gap up is a problem, and also these policy factors are going to be a big issue for genomics and biotech. So I'd be very wary of that. PSEB is down 0.53%. It still has got a support out here at 1.75. I'm going to turn this green. I don't know why it is red out here. And then we have Intelia, which is up 2.34%. It is moving towards the upper band of this this bear channel. Again, sectoral rotation is at play in my opinion. Illumina is up 0.46%. As I said before, there's going to be consolidation at the $100 range, and once China removes its objections, we might go up. The worst we could drop down, I think, is 97.65. That's my opinion. IMTX is flat in pre-market trade. Editas is up 6.90 in pre-market trade. We have a potential reverse head and shoulder. Is that what is happening? And is this just a sectoral rotation? That's what I'm thinking. I have a big question mark out here. We'll watch this space for the next few days, especially because of the policy decisions that are coming out of the new government with regard to biotech. I'm not going to be very bullish. I'm not going to plot a target for this reverse head and shoulders. Iowa is up 0.18%, and we have got Unicure, which is down 6.56% on yesterday's trade. There's this huge gap up attracting as a magnet. Pre-market, we have no trades. The momentum is also dropping. So I think the gap fill is in order now. Vertex is up 0.15%, still on the bull channel, and MACD is bearish. Momentum is just above average and flat. So I don't know what to say about Vertex, but as long as it remains above this diagonal line of support, I'm happy with that. And then we have MBOT, which is up 2.60%, a purely speculative position in this at this point of time. It's also fallen below the 21-day exponential moving average. MACD is bearish. Momentum is just about average. Everybody is gearing up for the earnings, which is due on the 26th of Feb. That's around a week from now. So I'll be very careful with MBOT. It's dangerous. Next, let's go on to AI and have a quick look at what's happening in AI. We have Google up 0.31%. There's a huge pocket of demand out here, which keeps on pushing Google up. And then we have Tesla, which is up 0.15% this morning. We still have resistance at 360.19 that we haven't been able to crack in the last 2 days. Apple is down 0.13%, but it has got this diagonal line of support now, helping it. MACD is bullish. Momentum is also above average, but flat. Then we have Meta, which is down 0.35%, still within this bull channel. It's still about 21-day exponential. So I'm okay with it, but we are seeing the MACD deteriorating, and we have seen that the RSI, which was overbought, has already cooled. So we could see a bit of consolidation today. As long as we are about 21-day exponential, I'm okay. But if we fall below that, then I'll be getting concerned. Microsoft is down 0.03%. It is staying above this support of 404.55. It is consolidating. So hopefully it can coil and come back as the MACD repairs and the momentum picks up. Amazon is down 0.24%. It's starting to create a lot of lows, but I have not yet seen any higher high. So I'll wait and see what happens, whether the MACD goes worse and whether the momentum continues to fall. Everything is going for Amazon because they also sell staples and they are providing services which are contracted for a long period of time. And therefore, I think Amazon should be able to handle any downturns much better, but I would assume that right now we are looking at a consolidation phase. So I won't write off Amazon as yet. Nvidia is continuing to make its march up. It's up 0.40%. I of course had this target of 152.63 earlier, and looking at the MACD and the momentum the way it is, I think that we could look for a few more days of gains. We have the earnings coming up. We could also have the situation where earnings becomes a buy the story, sell the rumor event, or the earnings could potentially push us upwards. I don't know which way. I'm holding on to all my Nvidia shares. I'm fully loaded on Nvidia. I had booked profit once by selling half of them, and I've then since then bought them back when the price was down. And my average price is still higher than what it was before, but I'm still very profitable in Nvidia in most of my portfolio. So I'm happy and I'm staying with that. That's my disclosure. Qualcomm is up 0.01%. I'm still looking at this cup and handle target of 200.87, which should happen. AMD is up 0.77. The question is AMD going to be similar to what we saw with Intel? Intel had a lot of consolidation. We had this triple bottom out here. I should have plotted out some price targets for it, but I did not do that. One was because the gain happened very fast and I didn't get the time to think through it, and my attention was diverted all over the place. Now that's one of the reasons why I possibly missed this out. But I think the Intel horse has already bolted the stable. Right now the risk reward is not in favor of rewards, it's more in favor of the risk. But the question is the same thing going to happen to AMD? That's what I'm thinking about, and I'm not able to say anything from this chart out here that something like that is likely to happen with AMD. But if we did cross the 21-day exponential moving average, and if the momentum became above average, I'll definitely start looking again at AMD. Then FNGU, of course, we don't have to talk about FNGU. Broadcom is down 0.95%, even though they say financials are all okay. I wouldn't believe it until we get an official press release that comes from some filings. And then Oracle is down 0.25%. Oracle is a strong company in my opinion, and it should be consolidating and moving upwards. It has completed the gap fill out here, but I think I'm very bullish on Oracle because contracts with Oracle are also long-term contracts. They don't get truncated all of a sudden. It takes time, whether it is cloud or whether it is ERP systems or anything that they are doing. So I'll hold on to Oracle out there. I think it's just a consolidation. Palantir is down 0.67%. I don't know how high Palantir will continue going because according to my chart, it still can go up. But when I look at the fundamentals and the pricing that has been done, it's very richly valued. So I think that some amount of consolidation and price drop risk always remains. The risk reward here is not great. So if you don't have a position in Palantir, getting in would be difficult and risky. And if you have a position in Palantir, maybe covered calls are your play ahead, or profit taking, partial profit booking would be something I might do. But again, these are my personal opinions, not financial advice. Please follow and do your own due diligence. And then we go to Cloudflare, which is down 0.49%, probably trying to do this gap fill. As long as it stays above the 21-day exponential, I'm going to be happy about it. Then we come to Adobe. Yesterday I sold off Adobe. I took a profit of around 5%. And I'm thinking that the market has got too volatile for my taste, even though VIX is not showing that, but I'm looking at the government policy decisions. I'm looking at the tariff specter, because when the tariff comes, what will happen is that everything becomes expensive for the buyer. And when things become expensive for the buyer, because the company will continue to pass on the tax to the buyer, so the company's sales volume will drop, but their profit margins will remain intact. And as the sales volume drop, they will start doing layoffs, and the workers might lose their job, and the demands will start to cool off. And that's when the governments will think that they would like to jointly reduce the tariffs and boost the production and increase the employment. So all those things are 6 to 8 months down the line, or maybe 1 or 2 years down the line, depending on how sensitive the governments are. But that seems to be a distinct possibility, rising yields. So I decided to get rid of and take profit here. I also sold off all the holdings that I had of Google and booked the profit. So I'm trimming all my positions. I've just retained Nvidia and Berkshire Hathaway, and my loss-making positions where I have big losses like Rigetti, AV, and SMR. So those are the loss-making positions that I'm still holding on to. And of course, ALT, which is a loss-making position, I'm still holding on to. SMCI has met and exceeded our cup and handle target, and it's moving further up. But I suspect that it's going to get a resistance out here at around, let me just turn this red before I forget, at around 60.40 we have a resistance. And this resistance, once overcome, will lead us to do a gap fill out here, which has not been done for a while. SMCI, I think, is on a long run, and we have ARM, which is going to be looking rather weak out here because MACD is bearish. And we have a resistance out here at 161.93. We are 159.72, down 0.37% in pre-market trades, but still above the 21-day exponential. So I don't see ARM doing that strongly at this point of time, but the company is fundamentally a good company. ASML is up 0.41%, still struggling to meet our cup and handle target of 792, and I think it's going to do that. MACD is getting weaker, momentum is also getting weaker, it's above average. So hopefully this early morning trend that we are seeing of a positive outcome, if it continues, I think we can continue marching towards our cup and handle target. Intel is, I think, fraught with more risk right now. It's down 3.07% in pre-market trades. If it manages to stay above the 200-day exponential, I would be really delighted with that. And then we have SMH, which is the semiconductor ETF. It's still continuing to move up. We got the MACD, which is bullish, and momentum also is going up. I think between NVIDIA and AMD, it should get support today, and Intel might be a drag, but Intel was giving it support in the last few days. So it's going to be a moderating effect today on SMH, I believe. AV is up 0.44%, and we got Snowflake, which is down 0.38%, but I still believe that we have a cup and handle target to meet, and that is competing with this gap fill magnet. So it's a push and pull going on. So the move up is going to be a bit slower, but MACD is still favorable, momentum is still favorable. Who knows, maybe the earnings will be a catalyst, or maybe the earnings can be buy the rumor, sell the news kind of an event. So either way, it's better to wait and watch before doing anything. HBI is up 2.78%, but still not high enough for me to get out without losing too much of my capital. Netflix is down 0.15%, and Dell is continuing to move up. It has gone up for the last couple of weeks. This morning it has given up around 0.68%. Of course, we are coming towards the earnings. If we stay above the 200-day and the 21-day exponential moving average, I would be happy. If we reverse this death cross out here and create a golden cross, then I would be happy. All of that is possible because we have got bullish MACD, and momentum is also pretty high, and there's plenty of room on the RSI. However, the earnings are also due on the 27th of February. So between now and then, if we form a golden cross, I would then say that we are looking good, but I'll still caution that we could be in a situation of buy the rumor and sell the news, because we also have to look at what outlook Dell is going to give. And if it's Dell is looking at all these tariffs and other things happening, then probably they are going to give a reduction in their sales, even though they may maintain the EPS. So look out for that. That's my thought. And then Rigetti, of course, is up 2.47% in pre-morning trade, and SMR is down 0.41% in pre-morning trade. I'm given up on SMR. I think this reverse head and shoulder target will not be met. It's expired, and our diagonal line of support out here has now become a diagonal line of resistance. Truly disappointed out here, but we are still in a long-term bull channel, so we could probably bounce back up. And there are some price estimates also which are pretty good. Riley adjust new scale power price target from $1.28 to $1.28 from $1.14. So right now we are at 22. So another $6 for that price target. So I think we are still okay. We'll stay in this bull channel. So having said that, now I want to take a look at our comment section and have some interaction. So Inf is saying, how is NASDAQ? We have already covered that. S&P, and I agree if sell-off on genomics will be hit. Yes. Okay, that's it. Let me go and have a look and see how many people are online right now. I think we have 5 concurrent viewers out here, so that is better than what we had yesterday. So I'm going to continue trudging on. So those of you who are online, please ask me any questions that you have, or else I'm going to end the live stream and go and grab breakfast. So whoever is on the line, just say hello or ask any questions that you have. Do you want any ticker to be looked at? Please mention that, and I'll take a quick technical analysis of that and give you what I think is going to happen, or else I think we just finish the live stream. Okay, so since there are no questions, how is HC and SCDG? They reported earnings. HC earnings, EPS surprise 11.99, revenue 1.09. Okay, I think HC would be a market where it is more of discretionary purchase. So you can see that the purchase has dropped, but the margins have remained, which is something that I was thinking about. Maybe this is a validation of that fact. We are still under the 200-day exponential. We have not been able to break through above that, despite the earnings. So I think that the earnings have been a bit positive for the stock, but not enough to bring it out of the bearishness. So at this point of time, what I would do is I'll just draw this line out here, and I'll assume that this was the previous bear channel, and I think we have got a support out here. We have to move above the 200-day exponential and move above this line of support in order to continue moving up. MACD is saying, yeah, you can move up, but momentum is flat. Momentum has got to start picking up. It has plenty of room to pick up, but I would also like to probably go and have a look at their earnings report and see what they are talking about in terms of outlook for the next quarter. If the next quarter outlook doesn't look great, then I think the stock price is definitely going to be on a downward trajectory. So that said, the other one that you were asking about was HC got booted from SP5 for PLTR inclusion. Yeah, so all those funds who are S&P 500 based, they must be selling HC, so there's a bit of selling pressure also out there. So that's also something that could account for this. And what else did you ask for? Yeah, that's about it. So I think I'm done for the day, and I'll catch up with you guys again tomorrow. And I hope we have more people joining up, and we can continue this conversation every morning. So till then, bye for now.